Very responsible as the organization grows, functions become departments management cannot control everything. So that's it. Responsibility center. That is the solution. Delegate authority and responsibility to different centers, departments, or persons. Hold them accountable for costs, revenue, profit, investments. Performance is measured against the standards of register. So cost center is there. Okay, in that standard cost center is there. So which is responsible for incurring the cost. There is no revenue responsibility. Performance measured by comparing actual and the standards. Okay, standard cost center output is measurable and input requirements are next. Can set the standards for cost and measure variances. Product example production department of a car plant. Okay, so it is this cost center. Next, discretionary cost center output cannot be measured financially. So actual expenses versus allocated budget. So costs are controlled by comparing. See, just here what we can do, there is no input output ratio, just we can put the budget, that's all. Other than that, we cannot do anything in discretionary cost centers. Next, revenue centers responsible for generating the revenue, sales departments measured against sales target. Also responsible for selling expenses like commission, but they are very small portion. Okay, next to profit center for both responsible for both costs and revenues. Profitability is measured. Decentralized branches. Decentralized branches means what? Branches will be having the power. Okay, so decentralized means what? Branches will be having the power. Decision making can be made by the branches. That is what is called decentralization. Centralization means what? For each and every decision, head office has to give permission or approval. That is what is called centralized. Decentralized means what? Branch will be having certain parts. That is what is called decentralized. Of a retail chain, each branch judged by profit returns. Okay, next investment center responsible for profits plus investment decisions both. Okay, next capital allocation will be made based on the return on investment will be measured. Okay, Maharatna PUCs like ONGC, NTPC, HPCL, so IOCL or codes. So that will be taken as investment. So this is the thing. Right. So now we will move on to other topics which we have not discussed so far. So what is the next? Roles and functions of cost and management accounting. See, repetitively in this first chapter, repetitively only one thing repeated discussed. Time and again, what is the cost accounting system shall be there? Okay, use of cost accounting system means we will get the cost data. Based on the data, management will take necessary decisions. Okay, so that is what the ultimate concept here. So even if you see, cost and management accounting is there, no? So what is the role of cost and management accounting? Obviously, cost data to be provided to the management will take decisions. Okay, so while installing cost and management accounting systems, what have we seen? Again, this has to be seen whether this purpose is being served or not. At the same time, information technology will be linked with cost and management so that our work will be easy and we will have customized report. At the same time, what will be there is no human intervention means there is less chance for errors. Okay, system will be more accurate than more humans and performance will be uniform. See, when a human is working, when a laborer is working or an employee is working, so he will be working very active in the first hours of a day. Okay, so and that too, that working will be depending on the mood with which he is coming to office or plant or production. Okay, if you have some discussion in the household, that will be carried to the work. Okay, so that too, before lunch we cannot move to work. Okay, so because he will be feeling hungry. After having lunch, he will be feeling sleepy. Okay, while going home, he will be thinking of so at what time the clock will tick, right? That means so when the clock will tick 5 or 6 hours. So in order to live. So that type of thinking will be there in humans. When compared to when it is a case of automated processing, maybe a machine or maybe a computer, what it will think, it will not think anything. Okay, it will not think anything. Okay, so that they will perform. So based on the capacity. So it may be machine capacity or it may be computer capacity or processing units. So they will work in the same fashion. Okay, there is a less sense for error unless and until there is a corruption of data. Okay, so that time no. So up to that time that will work correctly, accurately. So that's why integration of the cost and management accounting with information technology and digitalization of cost and management accounting is necessary. So all that will be discussed now. Okay, right. Okay, so role and functions of cost and management accounting. Cost and management accounting plays a dual role. Cost and management accounting plays a dual role. So one is cost accounting. First one, cost accounting. Second one is management accounting. You know the difference. Cost accounting, management accounting, financial accounting. We know the difference. Next, assisting in planning, measurement, and control. Allocate cost to the production inventory. What you will get out of that? If you allocate cost to the production inventory, what you will get? You will arrive at per unit cost. Okay, indirect expenses are there, no overheads are there. No, if you allocate to particular product or a service, then you will arrive at what cost per unit. Cost per unit is very much necessary. While doing cost per unit is very much necessary. Okay, so that is the ultimate thing which we have to. That is the objective ultimate thing we have to do. So cost and management accounting plays a dual role. One is cost accounting. So where we will collect the information, ascertain the cost. We will collect the information and ascertain the cost. Cost of a material, cost of the labor, cost of the department, cost of a process, cost of a job, cost of the ultimate complete unit or product. Okay, so likewise we will arrive at the cost. So that means we will be having data, collecting the data. Based on that, we will ascertain the cost. So ascertaining the cost and that to classifying the cost. Whether it is a direct cost or indirect cost, like this you will classify the cost. So after classification of the cost, what you will do? You will assign the cost. So assigning the cost to the products or services, so that you will ascertain the per unit cost. This is what is called cost accounting. Next, what is management accounting? Using the cost data for decision making is called management accounting. So providing meaningful reports for managers to plan, control, and make decisions. So this is what is called management accounting. The key roles here are provide relevant information for decision making and assisting in planning, measurement, and control, allocating cost to the products and investments in inventory. So these are the key roles. So supply data to answer the questions like: should we reduce selling price? Which product line is more profitable for us? Should we outsource the process or do it in the house? That means in the company only we will do outsource the process. So all the decisions will be taken with the help of the relevant information for decision. Okay. So without information, you cannot make proper decisions. Okay. Right. A furniture company decides whether to use the imported wood or local wood. Okay. That will be based on the cost benefit data. Okay. Cost benefit data. So higher quality, higher cost if it is imported, or local wood means cheaper or moderate quality. Okay, so based on cost benefit analysis, so whenever you are using imported wood, what price advantage you are getting, what more selling price you can charge from the customer, that you can check and then take the decision. So assisting in planning, measurement, and control helps set the budgets. So based on the cost data only, you can plan the budget. So you will be having an experience of last 5 years data, last 4 years data. You will take out cost data. You will take out. Based on this, you will put a budget. You will put an estimate. So you will be knowing a particular period or a particular product is ultimately operated, and this is the best which we have given this batch, given this product. You will have some track record like past history. So based on this history, you can put a budget. So likewise, that will help. So help setting the budgets, measure the actual results, and analyze the deviation. Hospital plans annual expenses, equipment to staff. Compares with monthly actuals. Okay, controls overspending. So this is what is example. Next, allocate the cost to the products and inventory. Necessary for both internal use and external use. Internal use for management control. That means cost management. See, generally this cost accounting and management accounting are internal. Financial accounting generally. Okay, so for management accounting, cost accounting is then cost to data will be used internally. Generally, okay. External is less. Okay, less usage of external sources. But financial accounting is there, no, that will be used by. Uh, See here, financial generally while investing in shares, what the shareholders. So nowadays they are having some financial knowledge. How they are getting financial knowledge? They are working many sources of that. So online content is there. So like they are having financial knowledge and checking for this financial ratios and financial analysis they are doing while investing. Okay, so investors are having some awareness nowadays. Okay, they don't have access to cost data and management accounting decisions. Okay, so they will be having an annual report where all the activities of the company are being mentioned there, but they will not mention the cost data, breakup of the cost, material from where they are procuring the material, what is the cost of the material, or what is the labor they are using, what is the cost of the labor. Everything will not be put there. So only the financial performance of the company, financial position of the company will be placed there. What they are going to do, what is their vision, what is their mission, like this they will do. Okay, so based on that data only, so they will be having vision. So investors will be having the vision. At the same time, government will be having this vision. I mean, government will be having the information from the financial accounting. Generally, this is internal. Why it is internal, and that too internal data will fix the management and better decision making or cost control or increasing the selling price or reducing the selling price or having the better market share, like having the cost leadership or cost advantage, so they can plan. So this is what is management accounting and cost accounting systems. Financial accounting is generally external. So for both internal use, management control, and external use like financial reporting, valuation, everything it is necessary. An automobile plant assigns cost to each car model to know the profitability and stock condition. Each car model, okay, for each car it is being assigned, it is being allocated. Okay, so then the car price, actual car price will be coming out. Okay, so functions of cost and management accounting: collection and accumulation of cost, assigning cost to cost objects, budgeting and standard setting, providing relevant information to MIS, and okay, performance measurement of responsibility centers. So these are the functions. Collection and accumulation of cost means collecting cost data, like generally gather all the costs under material, labor, overheads. So in a bakery, floor, sugar, material cost, bakery wages, labor cost, oven rent, overhead. So all this will be collected. So what is the cost we are incurring? Assigning cost to cost objects. First of all, cost object means what? We already told this. Cost object means what? So by ascertaining the cost, what cost we are ascertaining? That is what the cost object. It may be a particular product or it may be a particular department or it may be a particular process. What cost we are deriving? That is what is cost objects. So now while deriving the cost object, while deriving the cost of a particular cost object, what we have to do? Overheads or indirect expenses, everything will be there. No, that has to be allocated based on a particular criteria, based on a particular so something other based on the number of hours, based on the number of employees, based on the amount of the material used. So there will be some basis within based on that we will allocate the indirect cost to the cost object. So right, so assigning cost to the cost object, allocate the cost to unit or job or a department or a process or to find out the exact cost per product. Okay, so cost object. So assigning total bakery cost separately to cakes, pastries and cookies to see which earns the more. Okay, like this. Next, budgeting and standard setting. Budgeting is different from standard. Okay, standard costing is different, budgeting is different. So we have two separate chapters. Budgeting, standard costing. So budgeting, budget and budgetary control, standard costing. So budget will be seen for an entire period. Generally, it will not go for product price. Standard costing will be generally product price. Okay, okay, and that too, setting the budgets or standards for the cost before production, compare with the actual and analyze the variances. So when you know the variance, then you will find the reason. You will try to find the reason. If the reason is within our control, then we will take corrective action. So all this will be happen only with the correct cost data. Okay. So monthly sugar budget is 50,000, actual is 55,000. Report the variance to the management. Why it is higher? So based on the material quantity, based on the material rate, based on the supply, or based on the usage of the material, higher usage of the material based on the loss, I mean normal loss or based on the abnormal loss. So why the deviance is happening like that? If it is an abnormal loss means it is one type, you can ignore. If it is normal loss means how can you cut down the normal loss? Okay, so like this. Next, providing relevant information through MIS. MIS means what? Management Information System. So all the costing accounting should serve the purpose of a reporting into the management. So there shall be a proper reporting system. Okay, for internal decision making, cost optimization, price fixation, okay, and process improvements of market plans. A retail chain, MIS gives real-time sales and cost reports per branch for pricing strategy. Next, performance measurement of responsibility centers. Obviously, there will be a meeting of all the responsibility centers or the cost centers or the revenue centers or the profit centers. There they will evaluate, monitor the departments or teams responsibility centers by comparing their performance with the standards, time taken, wastage, ideal time. So compare production department's standard time, okay, hours per day versus actual, okay. Identify the inefficiency, corrective actions can be taken. So these are the things which functions of a cost and management. Next, users of cost and management accounting information. So what is the information derived from the cost and management information? This is the chapter where we will talk more about theory. Okay, so there will be less numericals, and that too, this is the last class. Okay, from tomorrow onwards, we'll start with material costing, where we are only more focused about the numerical side, practical questions. We'll be starting from tomorrow. So this is the last class where we are discussing theory, and you will feel some boredom. Okay, right. Users of cost and management accounting information. Internal users are external users. Internal users are there. External users are. Internal users, see here. Internal users. Internal users, look. You have policy makers. Policy makers means generally who will be the policy makers? Who will be the policy makers? Top level management. Okay, top level management will be the policy makers. Okay. Next, managers. Managers are generally middle level. Okay, middle level. And next is staff level. That is operational level. Operational level staff. Okay, employees of the company. Employees of the company. So we'll be using the information from the cost and management accounting. Okay, those are the internal users. Who are they? Top level management, middle level management, operational level management, and employees. Why they will use it, how they will use it, we'll see. So these are the people inside the organization who use the cost and management data to plan and control and make decisions. So obviously, we are starting from the very beginning. We are telling this. Okay, right. Policy makers. Policy makers are top level management. So they will make decisions. There may be short term decisions or long term decisions. Okay, and so they will decide the organizational structure also. Okay, how the structure should be. Okay, should we continue this plant or not? Shall we shift this plant to a separate location or another location? Or whether this office shall be maintained or e-office, we will go for what we call virtual office. Okay, like this decision can be made by the management. So top level executives are board members who formulate strategies and long-term policies. How they use information, the short-term and long-term goals. Set short-term and long-term goals. Position the company in a competitive market, cost leadership and premium pricing. Decide organizational structure to implement the strategies. The CEO of the cement company uses cost data to decide whether to enter into a new geographical market or focus on domestic expansion. In new geographical market means whether we will go for an export or shall we supply locally or domestic only. That decision can be taken. So based on the input from the cost accounting system. Managers are there, middle level managers. So they should be, see what top level management is thinking, what the top level management is setting as a standard, what is their budget they have to know. So that way, middle level managers will use the information and who are responsible for product lines, departments, and projects. They will find out the cost of the cost object and cost center, decide the selling price of a product or service. Okay, top level management will decide generally in a small organizational structure or middle level organizational structure. If there is a top or major organization structure or a bigger organization structure, they are not concerned with the selling prices. They are just to talk to the entire, let's say Tata Sons are there. Tata Sons. Okay, so they will control all the businesses. So they will not go into this selling price product from where you are purchasing the product, where you are putting the plant. They don't bother all this. So they will have information that this business is doing good, this business is doing good, this company is doing good. No. That's they are concerned about that only. So if they see from the last 3 years they are reporting, they are continuously reporting losses. So then in such cases they will try to divest. I mean they will try to sell out the unit or to discontinue the unit. So like this they will make a decision. So selling price and all like or deciding the products or deciding the line of the product whether we go for this variety of the product or not. Those will be decided by the middle levels obviously. So in a bigger organizational structure this will happen. Okay, in a smaller organizational structure, selling price and all will be decided by the top level management. Right, evaluate the performance of the departments. Analyze profitability product wise, department wise, and customer wise. Next, assess the strategic options, continue or discontinue a product. Okay, so marketing manager checks cost per unit to decide discount strategy for festive sales. So obviously, he shall be knowing the cost. Marketing manager. Otherwise, we can, up to what extent you can give the discount, we don't know. So without cost information. So that's why. So selling price will be there, some MRP will be there. Out of that, how much discount can be offered to attract a customer shall be known to the marketing manager. Okay, but then only you can close a better deal. Next, operational level strength. Supervisors will be there, foreman or team leaders will be there. So directly handle day-to-day operations. So next, they shall how they use the information, understanding the objectives and performance goals. So what they have to work, they shall be having a notion. So in order to create the impact or to create a mindset, we shall be giving the cost data, cost information. So they will not be having information to all the cost data, but for their department, for their role is concerned, they will be informed. Okay. So let's say a labor is working in the production unit. They shall be knowing the standard. What is the standard? What is the input? What is the output? They shall be maintaining the ratio. So without knowing the standard, they cannot do better. So that's why the standard has to be informed to the particular labor who is working in the production. So likewise. So know the product or service specification, quality of the volume. Ultimately, we shall be knowing. So otherwise, we cannot give a better quality. Or what is the desired quality, what is the expected quality also, he will not be knowing. Then he cannot work properly. Okay. Right. Next, monitor performance parameters, output defect rate, and understand profitability of the division responsibilities. And okay, so whether the entire operational or a process or a department is working correctly or not, or they are contributing to the organization goals or not, will be known only when they know this cost. Next, shop floor supervisor uses the cost reports to reduce material wastage in production line. Next, employees. So employees will be knowing the incentives, will be knowing the pay. Okay, so how they will be paid, how they will get more incentive, how they will get more bonus or incentives based on their performance. That they have to know. Okay, so all the workers and the staff in the organizations. Next, how they will use the information to know time and attendance records. Okay, so next, incentive linked to the performance standards for bonuses. See here, some information has to be maintained. Cost accounting system only will maintain the information. Employee attendance is there, no? So nowhere in the financial records they will tell employee attendance has to be maintained properly or incentive scheme shall be there. Whatever the system is, based on the system, we have to arrive at a proper cost. That cost will be there in P&L account, trading account, or it will be a balance sheet item, P&L item. So that will be given as an accounting policy, accounting treatment. Financial records will be prepared as per that. But when it comes to employee attendance, employee incentive scheme, in motivating the employees, giving the employees stock option plans. Okay, so likewise, the bonuses, incentives, they don't involve. Financial reporting won't involve. Whatever is happening in the company is there. So that will be recorded. So that will be given a treatment, accounting treatment after the accounting notes. That is financial reports. Whenever a cost and management accounting is there, so in order to keep the employees motivated, in order to achieve the employees, so they will have some entertainment program, welfare schemes, or insurance schemes, or life insurance schemes, health insurance schemes. Okay, so likewise they will be having some sponsorship of a trip. So they will be having a scheme. Okay, So this will be that will be known to the employees. So how they will be eligible for all these schemes, how they can avail more benefits, or how they can avail the bonus or incentives like this. So factory workers check their piece rate, how much they are getting. So in what way they have to work in order to earn more like this. So payment calculation based on the cost target section. Okay, so next, now comes the external users. External users means which are outside the organization. They are regulatory authorities, auditors, regulatory shareholders, creditors and vendors. So these are the outsiders. Regulatory authorities means what are the departments, government departments. Okay, what are the government departments? What are the general acts? What are the acts applicable to a particular organization? Let's say a company is there, manufacturing unit is there. Obviously, they are maintaining a factory. That's why factory is actually applicable. Okay, they are dealing with labor act will applicable. Okay, they are having workers in their company. That's why EPF, EPF and ESA will be applicable. Gratuity will be applicable. Provident fund will be applicable. They are using more water resources. They are using more electricity. So that's why what we call water treatment, wastewater treatment. So likewise, pollution control department will be applicable or monitoring them, or they are doing export inspection agencies, Director General of Foreign Trade. So all this will be monitoring. So based on the business in which you are being, see, for everyone, accounting treatment, accounting policies, accounting standards will be applicable. Whatever the company it may be, whatever the entity it may be. For everyone, income tax is applicable. For almost all, GST will be applicable. So these are common. Based on the line of business, based on the specific business which we are doing, if it is a labor intensive business, labor laws will be applicable. If it is an export oriented unit, the export inspection agencies and the DGFT will be applicable. So that will be specific to a particular business. Okay, so those are called regulatory authorities. See, let's say recently Trump tariff kar diya. Okay, Trump tariff, he is declaring that this is the amount of customs duty on Indian imports. So if anybody is importing from India, so out of 100 rupees, 25 rupees has to be paid as customs duty. That they have that as a basic customs duty. Okay, so that is the policy decision made by that country, trade policy. Okay, see here, if the cost accounting is well maintained in a particular company. We are talking about shrimp company. So the cost data is well maintained in the shrimp company. So entire industry, all the players in the industry, that means all the businessmen in the particular business can go to the foreign minister or commerce minister and represent their matter that we are contributing this much to the country. We are getting this much of foreign reserves or foreign exchange every year. So from last 10 years, this much is the foreign reserves or foreign currency that is kept coming into coming into India from our exporters association or from seafood export association. So this much is the tariff means this will be affecting the industry like in this way, like suppliers will be, like farmers will be affected, processing plant will be affected, so connected industry will be affected. Like that, you can have a better representation whenever you are having a cost data, correct cost data. Okay, so and that too, if it is uniformly maintained, it is more advantageous. If it is not uniform, like you are having a different format or you are having a different formula, so likewise, if you are maintaining not uniformly, so there is no particular standard for it. It's in that way, you cannot compile the data of all the companies in the particular industry. Okay, so that shall be uniformly maintained. Then it can be well represented before a regulatory authorities. So regulatory authorities will be what we call regulatory authorities will be using the information for setting the tax rate, for giving exemptions. Okay, so that information, see now how many employees are dependent on this sector. See, there is a major problem in India. What is that? Unemployment. So on this particular sector, there are thousands of employees, lakhs of employees are dependent on this sector means. So government will support the sector by giving some incentive, by giving some subsidy, and what you call it, by promoting the new players coming into the industry. So likewise they will promote the industry. So based on the data only they can take the decision. No? So that's why government should be having the information, past information. Okay, right. So and that too, see, if you have company law, in the company law, if I'm not wrong, section 148 will be talking about cost reports to be maintained compulsory. As per the Companies Act, section 148 of Companies Act 2013. I think it is 148 or 138. I'm so confused. Okay, anyway, so cost records has to be maintained compulsorily by particular specified entities. So if this turnover is crossed this much, if the rate of share capital is crossed this much, they have to maintain these cost records. Okay. Why they have to maintain compulsorily? Government should be using that information. Okay, it shall be reported to the government. Right. So government or statutory bodies controlling the tariffs, subsidies, rates, tariffs, subsidies, rates, everything. See, if the industry is representing better at commerce industry or foreign minister, then only they can go to foreign, I mean, they can go to US embassy and then have a discussion. But these are the rates, so by with this rates, this will be affected. Your people will be affected and our business will be affected. How they will be affected? If they are increasing tariffs, no, customs duty, no, the price of the product will be higher. Price of the product will be higher and who will be the ultimate consumer? US citizen will be the ultimate consumer. Obviously, rates will be inflated to them. When the rates are higher, they will not purchase from us. They will not purchase from us. Now, our business will be affected. In the both ways, they will be affected. So, like this, they will make a representation. So, representation with the values. So, this much is the turnover from this company, this country to this country. We are doing every year. Okay, so this is the benefit getting to you. So, like this, they will have a better data presentation. So, why they need the cost information for tariff determination? Tariff means what? Rate of duty, rate of customs duty. Okay, rate fixation, granting subsidies, etc. Need data in specific standard formats. Why shall we uniformly present it? Then only they will have a specific data. Okay, otherwise it will be cumbersome. Next, Electricity Regulatory Commission uses cost data from power companies to fix consumer tariffs. Okay, auditors will be knowing the cost data. See, GP is there, net profit is there. Okay, so see, if you know the cost data correctly, then you can estimate GP, then you can estimate net profit. So you can, by straight away looking at the information of P&L account, you can tell that you can have an what you call estimate of whether these accounts are correct or not. Okay, at least you will have some idea. At least 50 to 60% you can predict whether these accounts are correct or not based on the gross profit ratio, based on the net profit ratio. How it will be known to you? Based on the cost figures, it will be known to you. So why the auditor is need of gross profit and net profit and all? So you are writing the financial statement. See, let's say you know the tax rate, income tax is there. So if income tax is there, see, let's say you are doing a business of 100 crores. Okay, minus expenses. Expenses means all expenses. It is direct expense and indirect expense, overheads and everything. So it is 90 crores. Okay, ultimately 10 crores is the profit. Okay, out of 10 crores, 22% tax has to be paid by the company. 22%. That means what? 2.2 crores has to be paid. Okay, if the company reported a profit of 10 crores, they have to pay 2.2 crores. Additionally, cess will be there, almost another 30 lakhs will be coming. Ultimately, 2.5 crores has to be contributed by the company to the government in the form. So, likewise, 2.5 crores collected from particular government. The government, Indian government is getting lakhs of crores, almost 20 lakh crores revenue will be coming from income tax. 20 lakh crores will be coming from income tax. So this tax will be, that means revenue to the government will be under loss if they are under reporting. That means if they increase the cost, the reported profit of minus 10 crores, what will happen? This zero. This tax will be zero. 2.5 crores revenue lost to the government. Okay. On this document, who is signing? On this document, who is signing? Auditor is signing that I have gone to this company. I have gone through all the accounts. Their profit is 10 crore loss only. They have ultimately incurred a loss of 10 crores. You are signing. So by your signature, they are already. Okay, so how can you estimate whether it is a profit making company or loss making company, whether they are reporting correctly or not? How can you estimate? If you have industry knowledge, costing knowledge, then you can have a pay estimate. So then, based on that, you will have a judgment whether to do audit for 10 days or whether you can complete the audit in 1 or 2 days or whether you have to check this particular item or whether not to check this or leave this particular item. So that you will have a pay understanding based on the cost reports. See, material cost is this much, labor cost is this much, overheads are this much. Then why they are reporting loss of 10 crores? That question will come to you based on the cost. So in that way, auditor can make use of the cost data. Okay. So to have a better judgment. Right? So auditor, who are they? Internal auditors, external auditors. Okay, statutory or cost auditors. Okay, why they need cost information to conduct cost audit and verify the financial statements? Check if the management reports match the financial reports. Management reports match the financial reports. So management accounting is different and financial accounting is different. Financial accounting is ultimately reporting. Financial accounting is ultimate report. What is the net profit? What is the gross profit? What is the cost? Everything will be reported. What is the sales? Okay, but there shall be a matching, no? So this will reflect here. Management accounting information only will reflect in financial reporting, but in a different format. Okay, there is a difference. So here they are telling that material cost is 10, labor cost is 8. Okay, other overheads are 2, totally 20. They are selling it at 30. Okay, 10 rupees is ultimate cost, ultimate profit. So they are reporting a profit of 5 only. Why this difference is coming? That can be enriched. That can be enriched. And that the cost auditors are there. No? Cost audit is not compulsory for every organization. Statutory audit by the chartered accountant is compulsory for every organization. Okay, but for this cost audit is concerned only on the limitations. There will be what is the paid up share capital, what is the turnover, what is the network, and that too coming under which sector, regulatory sector or non-regulatory sector. Based on that only cost audit will be there. Cost audit will be there. But for every organization, there is an ultimate recommended for cost accounting. Cost accountant who is maintaining all the cost data. Why the cost data is necessary? That is what this chapter is talking about. That is what this chapter is talking about. Who can maintain this cost records correctly? Cost auditor only can maintain the cost audit. Who is having the knowledge? CA is also fit for doing it. CA is also fit for doing it. But who is having the knowledge on the costing systems and cost accounting principles? Okay, they can only maintain this cost accounting. So, what kind of records has to be maintained, in what format they have to be maintained. Okay, so which type of costing has to be adopted, that will be given, right? So, to conduct the cost audit or verify the financial statement, check if management reports matching the financial reports. Cost auditor verify the cost reports of a pharmaceutical company for compliance with the company's cost records and audit rules. I already told you cost accounting standards will be there. Whether these cost accounting standards are being followed or not has to be checked by the cost audit. If cost audit is applicable to the company, cost audit is not applicable, this will not come. If cost audit is not applicable, it is not applicable to all the companies. The regulated sector based on the criteria only will be applicable. Okay, right. Next, shareholders. Shareholders obviously, shareholders who are the owners or investors of the company. Why they need to call? Why they need cost information? To understand the factors affecting their investment. So new orders, expansion of product market share, profitability trends. Information is communicated via annual reports and investor updates. But not all the information will be given. Not because that is a business secret. So from which supplier they are purchasing, at what price they are purchasing, okay, which skilled labor they are using. See, cost advantage is there. No? That is what brings you cost leadership. That's what brings you price advantage or cost competitiveness or price competitiveness. So that will not be leaked to the annual reports, which are public, documents. They will be kept to the public. Okay, on clicking of the button, you will get it can be downloaded. So in those records, it will not be given. So not all the data will be shared to the external users. Okay, like shareholders. Okay, information is there. In annual general meeting, that can be kept. They can be asked. Okay, in public domain, it cannot be kept. Shareholders of the automobile company want to know profitability of electric vehicle division before approving expansion. Okay, at the same time, See, shareholders shall be having the knowledge of costing or factors affecting the costing. Factors affecting the costing. Otherwise, they cannot take a better decision. Okay, see, let's say electric vehicles are being manufactured. In that, what is the main cost? Battery is the main cost. Battery is made up of lithium ion or other alternative options. That they have to know. Okay, which battery they are using? What type of material is being used? Okay, zinc batteries are being used. So which material is being used? Based on that, it will affect the cost. Based on the cost only, sales will be affected, or financial performance will be affected. Based on that only, market share and what we call the share price will be there in the market. Okay, so that will be used. Creditors and lenders. Creditors and lenders means suppliers. Okay, trade creditors or trade suppliers. Lenders means what? Bankers. They shall be knowing. Okay, what is the GP, what is the NP? They shall be knowing what is their cost. Then they will be having a pay evaluation. How much loan can be given to them? Whether we have given the loan, whether they are in a position to repay that or not. They are getting the margins or not. So likewise, they can have an evaluation. So banks and financial institutions are suppliers, giving goods or services on credit. Banks give financial services, suppliers give goods. Okay, to the company. Why they need cost information? To assess the company's ability to repay the loans or goods. Okay, so they will be needing the cost information, right? So interest in stock valuation, interest in stock valuation, net debt position, debtors. Whether it can be amount can be realized from debtors or not. How much is the age of the debtors? Age of the debtor means from when they are outstanding. Okay, we sold it is almost been 2 years since we sold an item to a particular customer or to a customer. From the customer, amount is not getting realized. Obviously, realization from such customer is there, no? Okay, that will affect our repayment. So they are more worried about that. At the same time, how much is the stock we are maintaining? That is also they are more worrying about that. Okay, so like this. Bank gives working capital loan based on what? Stock and debtors. See, bankers will be there, no? Bank will provide working capital loan. Working capital for working capital loans, obviously securities will be there. Collateral security will be there. Collateral securities are generally land or building. That will be there. Okay, so this will be on the name of the bank. That means original documents will be given and this will be charged to the bank. Okay, right. That means on the land and building, banks will be having the right. Okay, so yeah, the company will not be having the right to sell. Okay, without the permission of the bank. Right. This is one thing. And later on, see, the bank shall see the liquidity also. Monthly basis they could pay or not. See, ultimate security has to be seen. This is what is called collateral. So if he is not paying for many months or many years, how can we record the principal amount along with interest? That is one thing. First safety. Second safety is that regular maintenance. So monthly they could pay EMI amount. What has to be seen? So for paying EMI amount, they will see drawing power. So drawing power will be based on the stock. Will be based on the stock. How much stock they are maintaining plus book debts. Debts means what? Debtor balances. Debtor balances are debtor cycle. In how many days the customer is paying the company? In how many days the customer is? What is the age of the debtors? How good the debtors are? Okay, based on that, you will be having minus creditors, creditor balances. Then you will be having a value. On that value, 80% or 70% will be given as working capital loan. Okay, so that drawing power has to be checked once in 3 months, once in 6 months, or once in 1 year. Once in a year. Generally, it will be checked at least 6 months. They will be checked. Drawing power has to be checked. So generally, for a large company which is having more than 100 crores, 200 crores working capital loans will be there. No? So that loans will be checked once in 3 months. A stock audit will be conducted where stock valuation. You see here, stock valuation is there. No, here not just the stock will be valued. Not just the finished raw materials or semi-finished goods will be valued. Along with this stock, what will be valued? Book debts. Debtors will be valued. Debtors are also assets, no? That's the readily realizable assets. Okay, so that's it. Okay, that will be. So bankers will be having this information, stock information they need, debtors information they need, creditors information they need. What is the cost of the product? What is their? Who are their suppliers? Whether they are getting margins or not? So all this will be analyzed by the banker before giving the loan, after giving the loan by monitoring. Okay, it will give you right. So this is what these are the users of information, costing information. Internal users are there, external users. Internal users means top level, middle level, lower level, and employees will be there. External means auditors, shareholders, right. Right. Now comes the costing system. Installation of costing system. So installation of costing system. So why install a costing system? Why install a costing system? See, our organization is capable of meeting. See, whenever you are installing a costing system, that will also incur some cost. Obviously, there shall be some technical staff, cost accountant shall be there, or chartered accountant shall be there, who shall be in charge. So some organizations needs more number of chartered accountants, more number of cost accountants shall be there. Some organizations need 10 CS or 10 cost and management accountant. At least for SBA and SBA, they have to pay 1 lakh per month. Okay, so likewise, they can get that cost amount. Oh, see, if they are incurring that cost also, that benefit is getting from that cost amount. That they have to make an analysis, which is called cost benefit analysis. They have to make a cost benefit analysis. Based on that only, they have to decide whether to have a good cost accounting system or otherwise. Existing managers are there, existing employees are there. From them only we can get it done. Okay, an accountant is there who is looking at accounts team are there, four members account team are there. One is a financial manager and three other accountants are there. In that one accountant will be assigned with to maintain the cost records. Okay, so likewise can we plan in such a way, or if we can have a separate cost accounting team. Okay, see, cost accounting team is there. So whether we can go for a maintenance of a particular software, or else we can go manually with the use of a computer, and that too we have an Excel, Word documents, Excel, other presentations will be there. So based on these two only we will maintain, or else we will have a separate software for this. So that those involved decisions has to be taken. So costing installation of a costing system is must and a card. Okay, so with the existing employees only we can have a costing system. Okay, external services has to be recruited or not, it will be the discretion of the management, and that too their budget only they have to see. So whether they can bear them or not. So before setting up of any costing system, ask will the system give more benefits than the cost of setting it up. First question is cost benefit analysis. So a well-established costing system should provide accurate information for decisions, timely reports. Both shall be there. Accurate information shall be there, timely reporting shall be, both shall be. Okay. So factors to study before setting up a costing system. Objective. What is the objective? Why you are putting a costing system? Why you are putting a costing system? Okay, objective shall be there, and that and specific main object what has to be met with the use of a costing system. Next, costing. Next nature of the business and industry. So based on that also it will change. In which business you are in, which industry you are in, based on that it will change. Organizational hierarchy. Top level, middle level, and operational level. So top level management, who are they? How many are there? Middle level, who are they? How many are there? Operational level. At the same time, so how they are educated, how they can cooperate to the system based on that also. See, let's say lower level staff are there. So a software is being implemented for costing purposes. They will be given tabs to enter the data. Okay, so operational level managers they are given tabs. Okay, for entering the data. Okay, but they don't know how to elaborate the tabs. Then the system will be failing. So based on their capacity only, based on their knowledge, implementation has to be checked. Okay, so whether it can be implemented or not. So based on the organizational hierarchy also, costing system has to be decided, and knowing the product, which product we are dealing with, and that too, joint product or by product or single product, and kind of the product, whether it is perishable or non-perishable. So likewise we have to check. And knowing the production process. Each and every process has to be known. Entire chain, supply chain has to be known. End-to-end supply chain has to be known. Each and every process has to be known. And each and every department has to be known. And next, information synchronization. Okay, information synchronization. Synchronization is nothing but what we call information synchronization. If an entry is being entered at one place means it shall be updated in the system. Okay, so we are using 10 number of systems from 10 different places. All the data has to be combined. So every time you open means all the entries made by the 10 persons or the 10 systems has to be reported in the server. Likewise, synchronization shall be there. Method of maintenance of cost records. Okay, so how you are maintaining? So, see, there are two different systems, integrated and non-integrated systems. So which you are using? Statutory compliance and audit. If cost audit is applicable, so those records are being maintained which are necessary for cost audit. Okay, and the attributes of information means characters or qualities of the information. How the cost information shall be. Okay, so these are the things which shall be kept in mind while installing a costing system. So what are those? One is objective has to be seen. Next one, objective has to be seen. Next one, nature of the business is to be seen. Organization, hierarchy shall be considered. Knowing the product, knowing the production process, information synchronization has to be seen. Method of maintenance of cost records shall be seen. Statutory compliance and audit has to be looked into, and attributes of the information, that is quality of the information, has to be seen. So in that, the first objective, why you are implementing a costing system, what is your objective, what you are going to achieve with that, so that has to be seen. Why? So in order to fix the price, okay, in order to fix the selling price, or in order to have the cost control, or doing the profitability analysis. So all this will be given from a particular costing system, but it should be fixed. See, yesterday we talked about this water bottle. Okay, so water bottle, the selling price is already fixed. Okay, so that means your purpose will be to cost reduction or cost control. So we have talked about iPhone. Okay, in that the selling price will be fixed by the company itself. There will not be any competitive pricing there. So there your costing system will be for price fixation only and profitability only. Okay, there based on the cost you will add your profit, the selling price will be taken out. Okay, so likewise for what purpose you are doing one thing. Okay, that has to be seen. Next, next is the nature of the business and industry. Which business you are there, which industry you are there. So based on the industry, costing system will be changing. Okay, let's say if you are into service business, like transportation service or a hospital service or a hotel service, then process costing will be applicable to you. Okay, process costing or operating costing will be applicable to you. Okay, so likewise, so in construction industry you are there. Let's say, or also, let's say you are maintaining a furniture shop. Okay, furniture shop, where the good will be given by the customer. You will be customizing the product or doing the product and giving the customer. That is what is called job cost. That means you will be assigned with a job. Okay, you will be assigned with a job that has to be done. Okay, so that is there you will apply job cost. Okay, so a construction is there, or a project construction, or a particular house construction or apartment construction sector you are there. So in such cases, job costing will be. So based on the type of industry, based on the business, costing will change. Okay, type of costing will change. So that's why you have to decide. You have to know in which business you are there, in which industry you are there, what is the unique product which is applicable. So each industry has a unique cost needs and methods. So process costing is for oil refinery. Different processes are there, means oil refinery, chemical plant, and all. So material will be going through different processes. So in such cases, job costing is there for construction, custom furniture, and all. Job costing is enough. Likewise. Next, organizational hierarchy: top management, middle management, operational management. So corporate strategy and marketing position will be top management decision. Pricing and diversification decisions, middle management. Standards for middle users, idle time reports, and all operational levels. Okay. So top management needs profit per division. Operational staff needs daily production cost. Okay. So based on that, you have to plan the costing system. So what the top management need, what the middle management need, what the operational level need, what reports we have to give. That has to be. Next, knowing the product. So whether it is a perishable in nature or non-perishable in nature. Whether the products are byproducts or joint products. Just like oil refining has done, means petrol will be coming, diesel will be coming, kerosene will be coming. Okay. So likewise, a separate accounting for each product has to be made. Okay. So knowing, keeping the product in mind. Next, is knowing the production process. Okay, complete knowledge of the production stage is essential to apportion the cost scientifically and to identify the resources consumed in each process. Okay, steel plant cost allocation between blast furnace, rolling mill, and finishing. Next, knowing the production process. Complete knowledge of production stages is, so this we have seen. Information synchronization. Information synchronization. So costing data must serve multiple departments. Okay, accounting monthly stock statement for the banks. Taxation stock details for GST details. So both shall be served. Okay, when the records are being maintained, information will be given to various departments. Next method of, so when you are using a single system, integrated system. When you are using non-integrated system, no, it is not possible. Synchronization of information is not possible. So it will be used for that purpose only. These records will be used for in financial reporting separately. Okay, so it is not necessary all the time it will be scheduled, but it shall be kept in mind whether you want integrated or non-integrated. See method of maintenance of cost reports. So how the cost and financial accounts will be maintained. Integrated system means one set of books only. Okay, all the information is one. Two set of books means our cost reports and financial reports are different, but the reconciliation statement is necessary. Statutory and audit, whether cost audit is applicable to your. So if it is applicable, then you have to maintain as per the requirements of the company. Okay, if it is not applicable cost accounting standards. If it is not applicable, just normal cost accounting system is it. Okay, and information if you are providing, the information should be complete information, correct information, accurate information, and it shall be given timely, and it is relevant information and useful for which is used for decision making. So that means top level management is there. Okay, so employee attendance is given and employee or level attendance is given. So like this top level management doesn't want that information. So which information is applicable to whom, relevant to whom. Okay, so that information has to be given to that manager, that level of management. So information attributes are complete information shall be there, accurate information shall be there, and it should be on time, and it should be relevant information. Okay, it shall be there. So these are the actual attributes of a or the things which we shall consider before installing a costing system. These are to be installed, right? Next, costing accounting with information technology. With the use of information technology, what will happen? Use of information technology, work duplication will be, work will not be duplicated. See, whenever you are making one entries, let's say you are learning accounting journal entries, you are learning ledger account posting, you are learning, okay, finalizing the accounts, so trial balance, everything you are learning. But all this will not be need to be done. Okay, just an entry in the tally, if you want the journal entry, balance sheet will be ready. Okay, so that is the kind of software we have. Okay, tally is there. Whenever it is a small business will use tally, bigger business also will use tally. Generally, they will go for ERP, like SAP like accounting. Okay, SAP like accounting will be. See here, what is happening in the information when you are using information technology or softwares and digitalization, what is happening there? You are reducing the work. There will not be any duplication tasks. And that too, whenever you are passing one entry at one place, it will be uploaded in the system and server. Okay, so based on that entry, okay, by a particular manager or by a particular employee, so based on that, so all the relevant places the entry will be posted. It will be coming into the ledger, it will be coming into the finance, it will be coming into the batch. So likewise, the use will be there upon implementation of information technology and digitalization of the cost. So impact of IT on cost and management accounting, growth of e-commerce and competitive markets. So IT is not integral to costing. Modern systems use ERP, enterprise resource planning. ERP system. For costing it will be ERP, and for accounting also you can use ERP. So it will serve all the things. Okay. So and industry 4.4, which is automation and digitalization. Reducing the paperwork. Okay. And that too, see, let's say previously a peon used to be there. Generally, what they will do, he will be carrying the files from one table to another table, from one manager to another manager, from one department to another department. Now the digitalization is there. That means it will be stored in the server. So he will be working on a document. He will be completing all his work on the document that has to be given to the supervisor. Supervisor will be giving to the manager. Manager will be giving to the managing director, finance manager. So likewise, it shall be flowing from one person to another person. Now what will happen by sitting at the desk only without using the physical papers, without having an extra resource for transferring the files. So by sitting at one place, you will get. Okay, so that is what the use of information technology. So automation plus digitalization will happen. So key changes due to information technology are integration of activities via ERP. So there are integration of activities means when you are posting one single entry, multiple reports will be generated, multiple reports will be generated. See, when you are putting the what we call material cost, okay, raw material X, okay, we purchased 100 kgs, 100 rupees each, total 10,000 rupees, coming around 10,000 rupees. So now if you want to compare the rate, compare the rate, compare the volume which we have purchased in the last month, or if you want to compare the rate with other suppliers, same raw material X we are purchasing from 4 different suppliers. We can compare the rate of 4 different suppliers. All that will be coming after entering this. Just you will enter this only. But the automatic report will be generated as per your customization. How you want the report? So you want to compare the products, prices of 4 different suppliers. If you want to compare the product from month wise, so how the material rate is fluctuating. If you want to see that you can see. Okay. So likewise, if you are entering single data entry is being made means multiple reports are being generated. So it may be cost, it may be finance, or it may be inventory. Next, easier reconciliation of cost and financial reports. So automatic reconciliation, you don't need to do reconciliation. There will be a report there itself. Reconciliation will be auto generated, auto populated. So you have to review it. You have to just review it. That's it. Next, paperless environment. Obviously, there is no paperwork whenever there is an implementation of information technology. Okay. Next, online resource procurement. Online resource procurement. That is what you can order online. You can, with the use of information technology, directly your order can be placed to the supplier. Procurement can be made online. Okay, and that too, how much you have to order, at what time you have to order, that will be told by the system. Because materials are there. How much you have purchased, how much used, how much is there in the stock. That will be available in the system. So based on that, there will be a reordering level which you will kept, which is readily kept there. So if this quantity is touched, you have to make an order. You have to place an order for this much quantity. Okay, if you are feeding the system, then it will be automatically ordered without the intervention. Okay. Next, bill of materials and material requisition, labor reports, everything will be stored. Everything will be stored. There is no such thing. Say it will be misplaced. It is not properly handled. It is like torn and sent out, like torn and sent into the dustbin. Like it will not happen. Okay, right. Online resource procurement is there. So with the use of internet, external for purchase orders, stock movement, enables the just-in-time inventory system. Just-in-time inventory system will help you. How it will help you? Like you don't need to maintain more stock at your place, so that you can reduce the cost of maintaining the stock. Just-in-time means what? Before the start of the production, you will receive the material. So that can be planned. Accurate cost information, obviously. See, lesser human intervention, automated. So each cost center objects are codified. So that means separate code will be given to each center, and automated cost allocation can be made to centers. Next, uniformity across the locations. So the ERP ensures standard formats for reports, budgets, and variance analysis. Real-time variance analysis. So whenever the transaction or production or anything is being happened, that time only, so it will be immediate corrective action possible. Next, process monitoring and waste elimination. Process monitoring and waste elimination. So continuous tracking, identification of non-value added activities. Then we can remove the non-value added activities. Okay. So digital costing system, how it works, like conventional costing, but digital data collection, classification, accounting, all are automated and network linked. no manual intervention. Connected to suppliers through external network and customers and markets through digital platforms only. Next, data will be captured cost incurred on each cost object, time spent on each activity, resource consumption details, current market prices, raw materials and finished goods, lead time and material availability. Lead time means in what time you will get the material. Lead time means in what time you will get the material. And material, whether the material is available or not, in what time it will be coming to your place. Okay, demand trends and forecasts. So everything will be available. So when it is digitalized. So benefits of digital costing system: accurate cost ascertainment, object price, time analysis for incentive planning, material requirement planning in just-in-time inventory. Time analysis for incentive planning means what? How much time the employee is taking for giving one finished product. Okay, that way. Okay, based on that, incentive can be planned. Eliminate non-value added activities, real-time variance management, real-time at the when the transaction is happening at that time only you can have a variance analysis. Okay, so it is not later after 1 month or 6 months or 1 year. Okay, so it is a variance analysis at the place itself. So this has to be consumed. So this is the actual consumption. So based on that you will arrive at the difference variance and then you will track the results. Okay, predict the customer demand for budgeting and production, market price data for standard setting, and improve cost benefit analysis for strategic decisions. So all these are the what we call benefits of digitalization of costing reports or cost accounting system. Okay, right. So next next concept we can discuss. So cost objects, cost units, cost drivers we'll see. So this concept we'll see. Cost objects, cost object unit. Cost unit also you know. Generally, what is the, so if you purchase some mobile phones you are purchasing. What is the unit number of pieces? Okay, petrol you are purchasing. Fuel, how many liters you are purchasing? Okay, let's say chemical in solid form you are purchasing in kgs. So this is what is the unit. This is what is the unit. Cost object unit. Cost object. What is cost object? Cost object unit. So what cost you are taking? What cost you are ascertaining? It is a product, it is a service, it is a department, it is a process. So that is what is cost object. Next, cost drivers. Cost drivers means see, we are telling you we have to ascertain the cost, and that means what we have to calculate the cost or determine the cost. After determining the cost, if it is a direct cost, there is no problem. You directly allocate that to what per unit. Okay, so whenever it is an indirect cost, then we have to allocate. So allocation means there will be a basis. The allocation means there will be a basis. Let's say there will be a basis. Let's say labor are there, indirect labor are there. Indirect labor are there. So indirect labor cost is there. No, that cost has to be allocated to indirect cost. That cost has to be allocated to direct labor. Indirect labor cost has to be allocated to direct labor. And in what basis we can allocate? Say department C. Let's say 3 departments are there. We have 10 lakhs cost. Indirect labor cost 10 lakhs. Department 1, department 2, department 3. 3 departments are there. Okay, this 10 lakhs has to be, say, you are arriving at departmental cost. Each department, what is the cost? You are arriving at departmental, per department cost. Then you have to segregate to department 1, 2 and 3. How you will determine? See, this 10 lakhs is a common cost. So the indirect labor you are used for department 2, 3 and 1. For all these departments it has been used. Now how you will determine? There shall be some basis. So what is the machine hours? Okay, in department 1 or department 2 or department 3. If there are no machines, there are no manual intervention, like manual workers are, humans are being worked there. Okay, so that time how many labors are there? Okay, or labor hours are there. what is the output from each department, what is the consumption from each department, what is the size of each department. Based on that, there shall be a separate basis on which you have to elevate, you have to classify. That is what is called cost to driver. Cost to driver. So generally, cost to driver is here. Cost to driver is nothing but, let's say we have to make an order. Okay, we have to make an order of materials. So while ordering the material, you will be having a cost incurred for ordering a material, which is 1000 rupees per order. 1000 rupees per order. Okay. So number of orders in a year are 24. 24 orders has been placed in a year. Now 24,000 is the cost. So number of orders are there. No? Number of orders are there. This is what is cost driven. This is what is cost driven. Okay. Right. Passenger kilometers are there. Passenger kilometer. That means per passenger per kilometer. Cost is rupees 10. Rupees 10. 1000 passengers are there. Travel for 100 kilometers. Okay, 1000 passengers. So then the cost will be 10 into, I mean 1000 into 100 into 10. Okay, so like this 10 lakh cost is there. So now the cost driver is passenger kilometers. Okay, cost driver means what? Based on what the cost is changing. Based on what the cost is changing. Machine hours are there, labor hours are there. So those are the cost drivers. Based on what the cost is changing. Okay, so cost drivers will be used for assigning the cost. Okay, see, this is the concept of cost object, cost units, cost drivers. So the cost object, cost object is anything for which separate cost measurement is required. Separate cost measurement is required. So it can be a product, it may be a service cost, or it may be a project, or it may be a department, or it may be a customer per customer, or it may be activity or a process. Okay, what cost we are assigning. So if the management wants to know what is the cost of this, what is the cost of that, is a cost object. Okay, next examples of cost objects. It is a product, service, or a project, or an activity, or a process. Okay, see here in case of product, what is the cost of a smartphone, what is the cost of a car, what is the cost of a notebook, like this. Even the service, what is the cost of a journey from Delhi to Mumbai, what is the cost of an assignment. Okay, what is the cost of a service, particular service like it. Okay, next project, what is the cost of a metro rail project, what is the cost of a road construction for this particular road from here to here. Okay, so what is the cost, like this. Activity, what is the cost per inspection of a material, quality inspection of a material, what is the cost for placing the purchasing order. Process, what is the cost for crude oil refinement. Okay, further process may be there. Okay, what is the cost for particular process, like this. Melting billets in roll mills. This is one process. This is steel industry. This is the process of the steel industry. What is the cost of this particular project? Rolling mills. Okay, melting billets in rolling mills. So what is the cost of this process? So that is what is cost object is. Next, department cost, production department, or finance department, accounts department, or HR department. What is the cost of production department? What is the cost of finance department? What is the cost of accounting? What is the cost of HR? What is the cost of safety department, like fire and safety department? Why it is important? Cost object is central to all the cost analysis. Whether a cost is direct or indirect or fixed or variable depends on what cost object is considered. And wages of a machine operator is a direct cost for production department, and some wages indirect cost for entire. Next, cost units. Cost unit means it is a unit of measurement in which the cost is expressed. It allows conversion of cost per ton, cost per kilometer, cost per machine. Okay, right. So generally, per ton of steel, examples. For industry or product, automobile means number. Okay, cement means per ton or per bag. Bag will be generally 40 kgs bag, maybe 50 kgs bag, maybe. Okay, per. chemicals, liters, kgs, tons, and sometimes if it is a liquid, gallons. I think gallons also will be used. Gallons. Okay, so 158.9 liters will be treated as 1 gallon. So likewise, whenever it is a larger volume, gallons will be used as a unit. Power kilowatt hour, kilowatt hour. Okay, steel, tons will be used. Transportation passenger kilometer. Okay, see if it is a goods transportation, then what is the length, breadth, and height, which is nothing but volume and weight. Both will be used. Volume, weight. So this criteria will be used for charging. Okay, like gas, cubic feet. Okay, hotel or sometimes gas will be measured in liters also or kgs also. Next, hotel or catering per room, per day, per room per day it will be used. Meal per meal it will be the unit. Next, education per course per student, and hospitals per patient per day. Okay, like this. Next, special cases. Like a single order or a contract is there. Single order or a contract. That means what? So there is a contract for construction of a house. Okay. So that will be the cost unit per project, per contract. Is the cost. Batches. Sometimes we should be processing 100 shirts or 1000 bricks. That is what is the cost unit. Batch will be the cost. Next, cost to driver. So cost to driver is a factor that influences the level of cost. So based on what the cost will change, based on number of orders, what will cost will change. Based on number of hours, labor cost will change. Based on number of workers, labor cost will change. So that is what the cost to driver is. So generally look at the activity based costing. So it is a cost of incurring a cost. Okay, factors influencing the level of cost used in ABC costing to link activity resource consumption to product cost. It is that is nothing but allocation or assignment. So examples of cost drivers: number of machine setups. It is the setup cost. Setup cost, that is not installation cost. Number of machine setups. Next, number of purchase orders, procurement cost. Okay, hours spent on production inspection. Okay, quality control cost. Number of tests performed, lab or testing cost. So these are the cost drivers. Based on what the amount of total cost is changing. That is what the cost is. So a car manufacturing plant incurs cost for machine maintenance. Cost for machine maintenance. So cost to driver is equal to number of machine hours used. More machine use, higher maintenance cost. Okay. Next, call center records cost on telephone lines. Cost on telephone lines. Okay. So cost to driver is equal to number of calls and so that is what the cost of driver is. So this is what the cost of concept of cost object, cost unit, cost. Okay. So and we have techniques or methods of costing. That is what the last concept which we will discuss today. Okay. Techniques or methods of costing. So with that we can close this chapter. So tomorrow we can start material cost. Material cost. Okay. Thank you. We are now just left with the last concept of costing, last concept of the first chapter, okay, which is methods of costing and techniques of costing. Methods of costing and techniques of costing. Right. Okay. So methods of costing. If you see the methods of costing, different industries use different costing methods based on the. Here it is not coming. Full screen. Right. So different industries use different costing methods because the nature of the production and the services varies. Nature of the production based on the product, based on the service, based on the business which we are doing. So there will be a separate method for cost. Okay. See, every business is unique. So which will be having different process. Cement manufacturing is there. That is completely different, which involves lots of process. So if you come to a construction contract, that is completely different. Okay, so construction contract where will be having, where will be doing majority services we will do. Okay, the cost materials will be given by the contractor only. Generally, the contractor will execute the work. Sometimes, okay, sometimes material will be borne by the contractor. So based on the nature, it will change. What type of costing, what method of costing you use, it will be depending on the product or the business or the processes involved. Okay, so methods aim to ascertain cost per unit. Methods aim to ascertain cost. Ultimately, in costing, we need to determine the cost per unit. Ultimate cost per unit we have to determine. So cost per unit. So cost per unit of a particular product or batch cost or job cost or contract cost, depending on the operations, we will ascertain it. So based on the method of cost. So in that, if your product is a single product, if your product is a single product, only one type of product will be derived from a particular production process. Okay, then you will use generally output costing or single cost, where your product is one single product you are dealing in. So see here, it may be a cement industry, or it may be bricks, or it may be coal mines. Only one. Okay, only one output will be there. Mining is there. Mining. So there you will just blast the mines and get the only one output. Okay, so it may be a granite, or it may be a stone, or it may be a limestone, whatever it may be. So you will get only one unit out of it. Okay, out of the process. Then you will use only what costing, output costing or single cost. Okay, right. So whenever see here, extension of job costing, cost per job is calculated in batch cost. So which is extension of job costing? Batch costing is extension of so where it will be like the product will be coming out in batches. Product will be coming out in batches. So batch 1, batch 2, batch 3. So and that too, each batch consists of 100 units. Okay, so likewise you are using the cost. That means in a particular lot, 100 units will be your output, or 100 units will be your input, or 1000 units your output, 1000 units of input. So likewise, whenever you are using in batches, you are processing in batches, then you will use batch costing. Then you will arrive at what cost per batch cost. Per batch cost. Okay, so this is an extension of job costing. First of all, what is job costing? Job costing means exercising or doing a particular assignment, taking up a particular assignment. Let's say a carpenter is there, he will be assigned with doing a sofa. Okay, L-shaped sofa. Okay, which is having 5 seats. Okay, this is a particular job. So what is the cost involved in doing the job? That is what is job cost. That is what is job cost. Okay, so batch costing means extension of the job cost. So whenever you are doing 100 L-shaped sofas, so what will be the cost? That is what is called batch costing. So extension of job costing is batch costing. So there you will just what is the total cost of a particular batch. Okay, what is the total cost and number of units produced in a batch. If you see total cost coming around 1 lakh. Okay, 100 units produced in the batch, then 1000 rupees will be the per unit cost. So ultimately you can arrive at the per unit cost. Batch cost will be there, per unit cost will be there. Same is the case with job cost. Same is the case with job cost. Okay, right. Job costing is cost to each specific job, and that too a customized job. Customized job. So order is calculated separately, and customer specific production is being made. Then what is the cost of the job? And customer specification, generally whatever we are offering, so extension to that they are asking for us. Okay, so I want the particular packing. Okay, I want this material to be further processed in this way. Okay, they are presenting their own specifications. In such cases, that is what is called job costing. So what is the extra cost we are incurring? That is what is job costing. So printing press is there, customized furniture or motor workshops. Okay, so for each repair it is different. Motor workshop, right? Contract costing. Contract cost means per contract. Per contract means what is the cost of construction of a particular house? What is the cost of construction of a particular bridge? What is the cost of construction of a particular flat? Whatever. okay, or a highway, or a highway, or a what we call bridges, dams. Okay, so cost per contract is ascertained. It may be large scale and long term measure, but generally in construction of the buildings, bridges, roads, it will be used. It will be the cost of a particular project. In entirety, it will be seen. Cost of the project. Right. Next, process costing. Process costing will be process costing will be used whenever larger processes are involved. Larger processes are involved. See here, so textile industry may be there, paper industry may be there, sugar industry may be there. So in manufacturing of sugar, there are various processes involved. Okay, in manufacturing of paper, there are various processes involved. Cutting the wood, bringing the wood. Okay, so what we call, if you roll the wood, you will get a sheet. So after that, that will be coming crushing into a paste based on the pulp. So you will extract it. There are different processes involved. Even textile industry also we have seen. So even just for a what we call shirt manufacturing, there are various processes involved. So even see if you shrimp manufacturing also we have seen, there are different processes involved. So where you will follow process cost. That means for each process, what is the cost involved, that you will see. Next, operations cost. Operations costing means it will be used in the service industry. It will be used in the service industry, not say just like what transportation service, hospital services. Okay, so where you will arrive at passenger cost per kilometer, patient day cost. That means per day per patient, what is the cost involved, that you will arrive in operations cost. So operations costing, process cost, and multiple costing means see whenever directly one costing system is not fitting for a particular business, then you will go for multiple costing methods. So that is what is called combined costing, or combination of two or more costing methods is called multiple costing. Here what will happen is multiple costing. See here, let's say a car manufacturing company is there. So car manufacturing will be made, at the same time manufacturing activity or production activity will be there, and assembly will be there, and service will be there. Service will be there, and that too they are having already they are having retail stores also, distribution also they will. So if all these activities are there, then for each and every separate activity there shall be a separate cost. Okay, so that is what is called multiple cost. So these are the methods of cost. These are the methods of cost. Okay, so automobile manufacturing parts job costing, parts job costing for each part. Next, for assembly output costing. Right. Next, so activity based costing, specific mention. Activity based costing is nothing but it is a modern technique where, so you will be having, see here, assignment of cost is there, apportionment or assignment, whatever you call. So that is what assigning the cost to the activities. Cost drivers we have seen. What is cost driver? Based on what the cost will change, level of cost will change, which will influence the cost is called cost driver. So assigns the cost to the activities or cost drivers instead of products. Directly to the products, it will be assigned to cost drivers. So cost driver is the number of purchase orders, allocates the procurement cost to the products. Okay, cost driver later on will assign the or apportion the cost to the particular product. Right. So single product unte, then output costing. So bricks, cements example. Next, customer order unte, then you will follow job costing. Each job or each order. Then advertisement industry, printing industry, likewise. Next, or a customer, what we call carpenter, furniture manufacturing. Next, batch production is there, means batch costing. Each batch cost will be taken out. Example, pharma, shirt manufacturing, likewise. Continuous process are there, means process costing. Each process will be arrived at. Next, sugar or paper industry. Large contracts, then each contract will be taken out. That means cost will be derived. Contract cost. So where you will construction industry, it will be. Services, operations costing. Service unit, that means per kilometer, per passenger, it will be taken out. Transportation industry and hotels, hospitality, that will be mainly service industry, it will be used. Okay, next, mixed production means multiple costing method will be used. Okay, it is a combination. Next, car assembly is the example. Okay, right. Next, now the techniques of costing. Techniques means approaches used to ascertain and control the cost. Approaches used to ascertain the cost and controlling the cost. Ascertaining the cost and controlling the cost. Let's say standard costing is there. Standard costing. In standard costing, what we are doing? We will put a target cost. Okay, based on the target, we will compare the actual cost to target cost or standard cost will be compared. Then variance will be taken out. What is the variance you will check? Okay, so if it is favorable, adverse. If it is favorable, we will appreciate. If it is adverse, then we will question what is the reason for the adverse. Okay, adverse case. So the reason will be analyzed and corrective action can be made. Okay, corrective action can be taken. So likewise, these are the approaches or the techniques where we will control the cost, where we will control the cost, where we will ascertain the cost. Okay, so what are the techniques? So uniform costing is a technique. Uniform costing means what? Uniform costing means costing which shall be followed by all the players in the industry in the same way. All the players in the industry in the same way. Then you will compare the data. You can compare the data. Let's say shrimp manufacturing we have seen. So let's say 30 count is there. 30 count. What is count? Number of pieces per kg is called count. Correct? 30 count is there. For 30 count, there shall be a standard yield of 70%. That means when you are processing or deheading 30 count, what shall be the output? 70% shall be the output. Whenever you are handling 60 count, 69% is the output. This is the standard yield. Okay, so this can be set as a standard. This can be set as a standard only when all the players in the industry is reporting the such percentage. 70%. See, I am having a company, another person is having a company, you are having a company. So all our performance will be compared and we will arrive at a standard. That means whenever you are following a particular uniform system, then only you can have an advantage. Okay, so then the industry values or industry analysis can be compared. Okay, uniform costing, it is a common costing system which shall be followed by multiple firms in the same industry. Multiple firms means multiple companies, multiple businesses, multiple owners in the same industry. Industry means industry means what? Electronics industry, automobile industry, seafood industry. Okay, so textile industry. So industry means every player regarding that business. Okay, right. So common costing system followed by the entire industry is called uniform costing. That shall be followed. If it is followed, what will be the advantage? Then you can make a comparison. How much yield you are getting, how much yield I am getting, how much yield you are getting. Based on that, you can make a comparison. Yep. Then you can put a standard. If you are putting a standard, it will be compared with the actual. Then analysis can be made. Like so, helps in industry level cost benchmarking. Cost benchmarking. How the other firms in the industry is arriving at this product or costing this product or what cost they are incurring. Right? Textile means adopting same costing methods for government price fixation. Next, marginal costing. So then the representation will be good. Whenever you are following uniform costing, representation will be good. Next, marginal costing. Marginal costing where you will consider variable cost. You will keep the fixed cost aside. Okay, you will not consider the fixed cost. You will keep the fixed cost aside. So you will arrive at the variable cost. What? So for each level of production or each unit of production, what extra cost you are incurring? That is what is called variable cost. So consider only variable cost for decision making. Fixed cost treated as a period cost. Okay, so that will be kept aside. So it is used for profit planning, break-even analysis. That means how many units you are selling in order to cover your costs. Okay, how much units you need to sell in order to cover your cost. So, or see, margin of safety will be there. You have you heard this word, sir? Break-even sales, margin of safety. Break-even sales means what? How many units you need to sell in order to recover your costs. That is what is called break-even sales. Margin of safety means whatever you are selling beyond break-even sales is called margin of safety. Okay, right. Break-even analysis, everything will be planned using what? Marginal cost. So formula will be contribution sales minus variable. Marginal costing will make a discussion how you are arriving at. Right. Next is standard costing or variance analysis. Standard costing means target cost compared with the actual. Then you will have variance. Variance will be analyzed. Okay. So it will be used in cost control and performance evaluation. Okay. Standard labor cost versus actual labor cost. Variance will be taken. Right. Next, historical costing, which is the cost determined after it is incurred. Okay. So historical cost means it is nothing but past data. Based on the past data, you can set the standard. Okay. So post costing after production completed, continuous costing, that means even during the production also cost will be tracked and taken out. So based on that, you will put the standard. Okay, historical costing. Next, absorption costing. Absorption costing is nothing but you will be having fixed cost, variable cost. Okay, so in order to charge the fixed and variable cost to the product, so you will follow absorption cost, which is nothing but just like assigning the cost to the ultimate product. So unlike marginal costing is only concerned with variable cost. Here fixed costs are also considered and absorbed into the product cost. That means for each product, what is the cost means, even the fixed cost will be allocated to the main product cost. Okay, that will be allocated. Okay, so then you will arrive at the per unit cost. Okay, full cost used for stock valuation in the financial statements. Full cost will be taken. That means variable cost and fixed cost both will be taken. Fixed cost will be apportioned. Okay, and absorbed to products. So that you will arrive at the correct cost. Okay, so these are the methods of cost. These are the methods, techniques of cost. So what we are saying, methods of costing means singular output costing, batch costing, job costing, process costing, operations costing, contract costing, okay, and multiple costing. Yes. Okay, right. So when it comes to techniques of costing, uniform costing, marginal costing, standard costing or variance analysis. Next, historical cost and absorption cost. So these are the techniques. Right. So next, lastly, we have another concept, limitations. Okay, limitations of cost accounting. Limitations. See, we have to implement cost accounting system in the company. But what are the challenges? Okay, what are the challenges or obstacles in implementing the cost accounting system? First of all, you need to make a cost benefit analysis. So what you are getting out of it? Okay, whenever you are going for a new implementation of a costing system, what benefit you are deriving? Okay, so first of all, you need to make a cost benefit analysis. At what cost you are going to put a cost accounting system, and what benefits you are getting out of the costing system, that you have to make an analysis. So that's why limitations of cost accounting system, you have major three limitations. One is cost. It is expensive because it needs software, it needs technical persons like CAs, CMAs. So who is having technical knowledge, and not only CAs, CMAs, along with them a team shall be there. Okay, so all this will definitely cost the organization, and that way material cost. Material means which is a significant cost will be incurred. That we have to see. Right. Next, two set of books has to be maintained. Correct? Costing records shall be there, and financial records shall be there. Two set of records shall be maintained. Okay, so that's why there will be a problem of reconciliation. Okay, always reconciliation should be there between the two, costing and financial activities. And lastly, duplication of work. Whenever you are going for reconciliation, duplication will happen. Obviously, financial accounts, there shall be separate statutory requirements, separate reporting. For cost accounting, it may be internal or external, whatever it may be. So there shall be two sets. For cost accounting, there shall be a separate accounting system and separate reporting. Everything shall be met. So these are the three challenges for implementing a costing system. So firstly, expensive to maintain. Second, need for reconciliation. Third, duplication in the work. So these are the limitations of cost accounting system. These are the limitations of cost accounting system. So with which we have completed the chapter Introduction to Management. Now we will be going